We decided to hold the policy rate today because we are seeing clear evidence that higher interest rates are slowing the economy, and that's cooling inflation. But we did leave the door open to higher interest rates if needed.
The Bank of Canada holds the overnight rate at 5%, but warns underlying causes for inflation persist. Bank Governor Tiff Macklem says the bank is forecasting inflation back at 2% in 2025, but warns that as the economy slows, avoiding a recession looks more and more tricky.
We've been saying for some time that the path to a soft landing is narrow. And in this projection, that path has gotten narrower. We've got our near-term inflation forecast is a little higher. Our near-term output forecast is a bit lower. That path is getting narrower.
The bank forecasts several quarters of low positive growth, but Macklem concedes with such small margins, negative growth is also possible. Macklem also saying the bank didn't see existing public spending as inflationary, noting it came in below the growth of supply.
So if government spending is growing at 2% or less, it's not adding more demand, it's not adding faster to demand than supply is growing. So it's not adding sort of undue inflationary pressures. So if you look at government spending over the last year, it was below 2%. So it doesn't look like it's been adding undue inflationary pressures over the last year or so.
However, Macklem adds that federal, provincial, and municipal spending for next year is expected to grow demand by 2.5%, which could add to inflation. Opposition leader Pierre Poilievre quickly seizing on this moment.
He's now clearly saying that government spending is driving up inflation. So, very simple question. Does the Prime Minister agree with the bank governor that deficits are driving inflation? Yes or no?
Except, Mr. Speaker, that inflation is steadily coming down, Mr. Speaker.
In Ottawa, Xiao Li, City News.